I'd like to talk about what's the trigger and for a grocery store to be audited. So the number one is the company structure. If you are 1040 Schedule C, and you definitely have a higher chance to be audited, just because Schedule C is kind of a startup ideas. Schedule, oh, I actually was sharing the wrong screen. So let me stop sharing here and go to share that right screen for you. Number two, and I share. So, Kat, am I sharing the right screen?
You are.
All right. So that's our number one is company structure. And because 1040 Schedule C is a startup kind of beginning, so IRS knew that people make mistake. When you are so new to the business, how could you not make mistake, right? So IRS used that as a reason to look at Schedule C the most. So there you go. Company structure, if you are Schedule C, you have the most chance to be audited. And your data mismatch. What I mean by that is maybe you had a payroll and you submitted W-2, but your W-2 didn't match with the employees what they reported, so that could trigger you to be audited. Or your merchant account, they send up to IRS saying that you made a $2 million credit card sales, but on your tax return, you only reported $2 million. You are a grocery store. How could you just have the credit card income, right? So that would post a red flag, you'll be audited. And the related party audit, it is very possible that one of your employee got audited. And then he came up with this that, so he came up with saying that, oh no, I'm not an employee, I'm a 1099. So here is my 1099 income, but the issuer is a grocery store. There you go. You could be audited just because other people get audited. And the suspicious activities, maybe somebody filed a form called 8300. 8300 is a report that the company would submit when they receive more than $10,000 cash from you. For example, your supplier, maybe you went to buy additional supplies and this supplier you ended up paying cash and that cash is over 10,000, then the IRS will receive an 8300 form, shows that you're paying cash. But if IRS suspected you and you already not reporting cash, you only reported the credit card amount, then you have a cash 8300 being reported, of course. So that would trigger audit. Analytical procedures, these are the IRS guidelines for the auditors. And IRS will supply guidelines say that inventory to sales and that ratio should be 30% or less, and the cash should be about 10% of the total sales. Things like that, the IRS has it already. Based on all these years data accumulation, they have those ratios, then they will give to the auditor. Auditor will do analytical procedures and figure out, well, you're just really out of norm, then they are coming to audit you. Nature of the business, just because you are a grocery store, so you are just luckily the one will be audited easily because you are what they call the cash concentration store. Of course, with pandemic and with credit card, with virtual currency, all of these things kind of take away the cash part of it, but the reality is still so. And the grocery store do have a lot of cash transactions. So that would be the triggers for grocery store to be audited. And the other thing is, how do I know I am being audited? This is the question that I'm being asked a lot because sometimes, and they got a call, client got a call and saying that, well, Ying, I'm getting audited by IRS. And I said, okay, how did you know you got audited? Oh, I got a call. They told me that to call them back. This is the number. And they're asking me for EIN number and, all these stuff. And I say that no, IRS will never ever call you for audit. There's only 3 ways to get audited, okay? You get a letter from IRS saying that, hey, and you are being audited. The letter is very clear. It's not vague about you're being audited. And they may not say the word of audit, but they say your federal income tax return is under review. So that is audit. And there's 3 ways to audit you. Number 1, they give you a letter saying that I want to see this, and just give me that, mail it to me, and then let me take a look. That's called correspondence audit. It's just a letter, and it just ask you one specific items on your tax return or more specific items, but they don't mean to come to your face. They just want you to give them the backup. Number 2, compliance audit. That's normally in IRS's office. Like here in town, there is a federal building there. And so compliance audit is all happened there on the 4th floor. So you will get a letter says that we want to see you. And they want you to run your leg over so they see you. That's the second one. The third one is a field audit. So what is a field audit? Field audit is the IRS is sending letters saying, I'm visiting you on this day, this time. Be ready, I'm coming. That's a field audit. They come into the field, they audit you. So for the grocery store, and most likely is a field audit because the audit guidelines the IRS has and really, kind of prevented them from just doing correspondence audit or compliance audit. So they need to do field audit. And of course, there's a special investigation. So that is more of a criminal props. And it is, maybe you got, warrant from the federal government. They went to your store and seized all your properties and for whatever reason. So that's on the criminal side. Today, we don't cover that. We are going to cover how normally a grocery store will be audited. And what is the most kind of audit for grocery store? Like I said, you will either get a compliance audit or field audit. And most likely the field audit because the auditor needs to look at your store. Now, let me show you and what is the audit letter looks like. And you will say, Ying, now you said that, I'm getting a letter. What is the letter looks like? And I do have an example here for you. So now, and let's look at the example. So this is IRS letter that right in front of you right now. And in this letter, you can see that it has IRS logo. And then it's come here saying what you need to do. It says you have appointment and you need to come in this day, this time, and this address, and this room. And it also tells you that why we're doing it to you, because your examination will be focused on this and this, Schedule C, Schedule C. What is Schedule C? That's 1040 Schedule C, right? That is the sole proprietorship, and this is a grocery store, so that's why it has a Schedule C. So now, and when you go into the audit, you first got the letter, and sure, you have a choice. You can decide, I'm going in myself. I do everything honestly. I'm not worried, and I can do it. So of course, that's good for you. And but there's also people who will seek for professional help, coming to Community CPA. Hey, I need you to represent me. I'm so scared, I'm shaking, and I don't want to meet with the auditor. You go for me. And that is also doable. You can obtain representations from the CPA firm and the attorney and to go into IRS to represent you. So you do not have to go there. And in our general practice, if you are a grocery store, when you get audited, especially if it is a field audit, it doesn't really matter because they're going to come to your store, they're going to meet you anyway. So we typically would schedule that meeting at your store for the auditor to come. So you'll meet the auditor, we will meet the auditor, but we will prepare everything that auditor needs. So this is where you got the letter, you need to plan how you want to do it. So after you got the letter, and what else you need to do? After you got the letter, let me share that screen, and you will, your next step, it is what we call IDRs. What is IDR? Information Documentation Request. IDR, information request. So IDR 1, 2, 3, 4, 5, and in average, in one audit, you would get about 1 to 5 IDRs. So that means those are the IDRs that give you details of what they need, what IRS need. So IDR can be very detailed. IDR only gives you 2 weeks to get back. So each IDR comes in and you have 2 weeks to reply. So in this case, we will show you the IDR that comes in. Then IDR only give you 2 weeks and could ask you for computer files. Listen to that. So if you use QuickBook, IRS would ask you to give them the QuickBook, and I will show you how they ask for that. IRS can also expand the time of audit and also the years of audit. So IRS can say that, well, I was going to audit you just for 1 year. Now I see that your business is quite messy and I'm worried about there's a lot of cash missing. So I'm going to expand that to, so let's say they come in 2020, they could expand you for, they're auditing you for, they come in 2020, they're probably auditing you for 2018. They can expand right now to 2017 and 2019. Okay, so there is a statutory limitation. For regular audit, they don't go over 3 years. So the 3-year counting is your last year's plus the year before, and depends on in this case, if we audit 2019, your 2019 was filed this year in April. So that's pretty current. Then they can audit you 19, 18, and 17. So there's always a 3 years that, you know, possibly they ask for to audit you. So now let's go take a look at what it looked like for IDR. So now let's follow me. So this is the letter we got, right? The letter says that, hey, you get audited and, you know, ask you to prepare yourself. Then you make decision on who to hire, whether you go in yourself or, you know, how you're going to do it. Then the number 2 I want to share you is this IDR, information document request. See, that is 001. That number could go up to 0099. And of course, I have never, for 20 some years practice, I have never seen anything going 99, but I have seen that going to 15, 16. And in some smaller Schedule C audit, I would say normally goes up to about 5. And why do they do that? So I want to show you the first request. So this is the very first request, and see what they have here. And I want to show you, I want to give you a little bit review so you can see. So they're saying that they want your original accounting record and books. General ledger are summaries of Schedule C1, grocery store, the receipts. So then what is general ledger? A lot of people would come in, I don't have general ledger. It's totally okay, you don't have general ledger. But for a grocery store, when you don't have a general ledger, basically you don't have your transaction listed by date, by the vendor name, by the amount. IRS already know that you're pretty messy. There is no way someone can do grocery store accounting by just handwriting. No way. So it normally requires accounting system. If you don't have, they're just going to expand their audit. They're going to look more detailed. So they also ask you, look at that, any scheduled work papers which reconcile the tax return to your record book. What does that mean is the IRS require you to have a financial statement. Then you do your taxes. Financial statement and taxes are not exactly a copy. They are different by a little bit. So there's the tax and accounting difference. IRS want that reconciliation. And look, all bank statement, both personal and business. So don't think that they're auditing your business in grocery store business. When you get audited on a personal too, because what if you have all these cash deposited in your personal name? IRS wants to know, right? And then look at this. They are asking you for details. So please be specially prepared to explain and show your invoices and cancel checks for the following income and expenses. They check your income, they check your expense. On income, there's 267,000 total gross receipt. They want to know how you got there, okay? and purchase and your repairs. So 25,793. They want to know what you did with that. So in this case, I want to show you, and where is this number come from? So what I want to show you is here. This is that taxes that got audited. So look, this is the receipt. This is the total gross receipt, 267,282. That's exactly what the IRS was asking, 267,282. All right. And then if you look at this, and repairs and maintenance, 25,793. This is what IRS wants to know, 25,793. So everything you put on your tax return, IRS now wanting receipt. Remember, some people would come to our office and they will say, well, Ying, I have the number here, but I don't have the receipt. Is that okay? What's going to happen if I don't have receipt? So our answer to that, you really should have the receipt. But of course, when you file taxes, you sign your name saying it is true, oh true, nothing but not true, and then you don't have your receipt. And when people who prepare your taxes, it is not their job to make sure that you have all the receipt. If our staff asking you for a receipt, that means they go beyond their responsibility. They are so cool. They're so nice to you. They want to make sure you're okay. But if we just take your number, we put on the tax return, that number is wrong at this date, the IRS want receipts. So this is where we say that you really do have to have your ducks in the row, because it is not something once in a blue moon. This is somebody's full-time job at a federal agency. All they do all day long, all year long, all century long, all decade long is to audit you for this kind of thing. And then I also want to show you, it is not like they don't care about details. When they give you IDR, okay, this is the IDR too. When they give you IDR, look, they care about customer withdrawal. On your bank statement, you have this withdrawal, and IRS want to know every answer of that. So why are you doing customer withdrawal? You should just be writing a check and write on the memo what they are, so you don't have this type of question. And then look further, and look at this. Look at here. And in here, it says that a copy of the original electronic backup file of QuickBooks records that include the period, so they're auditing a period, includes the period, and this copy should not be an altered version of QuickBooks data, but rather a copy of original backup, all right? And then it also says the QuickBooks administrator username password for the backup file requested above. They want your password, okay? And administrator one. Do you know why? You don't know why. Because in QuickBooks, with administrator password, IRS will see all the numbers you altered, you deleted, and you changed. Are you ready to answer why you deleted $1 million every year at the year end? And if you're not ready to answer that, that QuickBooks backup file will tell IRS exactly that. Okay, so now I point that out because IRS had bought license to operate QuickBooks. So when you look for software to operate, and of course you look for the best software for your industry. Large grocery store, they don't use QuickBooks. QuickBooks has a limitation for larger business, right? And for smaller business, you have QuickBooks as a choice. You also have accounting CS, where community CPAs are using as a choice. So you want to know that QuickBooks, the biggest problem with QuickBooks is not even about IRS has a license. IRS can buy whatever license they buy. The biggest problem with QuickBooks is when you are audited by 2014, when you give your QuickBooks today, it's gonna have everything from the day you begin to the day you end. QuickBooks has no ability, absolutely no ability to give IRS just a portion of the data. So you can see the exposure. No more I need to say, you understand where I'm going. So then this is what I want to point out. Then I also want to point out that, you know, in this one, IRS says that the information is being requested under authority of IRS section, okay? All responses should be in writing and be accumulated and referenced to the order. So what IRS want to do is, IRS has those orders, so your backup need to be labeled and put together. So do you would not believe how much paper we do when we do a grocery store audit. And that markup files is literally this thick, literally 1,000, 2,000 pages. Okay, remember the printing paper stack, those are $500 a stack. So you imagine 4 of them together. So that would be things that you need to supply to IRS. So this would give you an idea of what it looks like. And on the IDR, and so this is what I show. This is what I showed you related to IDR, and I showed you where the number come from. They're asking. I reference to the tax return to you, so you understand where that from. And then I also tell you that what the extensiveness that they're asking, right? So now let's go back to our PowerPoint, and I like to, you know, make sure that we follow. We have a lot of content today, and I want to make sure we cover all of them. So now we got IDR piece. So you know what they want, and I already showed you the samples of those IDR. And now what I want to talk about, the next step is the special items to audit under grocery store. So under grocery store, and there are special items they like to audit you. And I want to lead you to an IRS website because the federal government has such a great idea, and they know what to do, and they also have this great presentation on website. You can find all the information in irs.gov. So the grocery store by IRS definition is a cash incentive business. So here, that's what the grocery store, they are telling the auditor to do. So I need to go back to a different sharing screen. Now you see, I give you a IRS website, right? You see the IRS website. If you go to IRS website, you go to business and self-employed, small business and self-employed. I want you to check out cash intensive business. This is grocery store, okay? And then look at here. They have a chapter called Introduction and Overview of Cash Incentive Business. This will tell the auditor what they are, grocery stores included, and a pre-audit, a background review of tax return. You think that people just come to you, hey, I like to audit you because they shop at your store and they don't like you that they did that? No. IRS audit is very independent. There is nothing about some auditors living next door to your neighborhood and you bumped into his car, so he's going to revenge. No, because all these audit files are being reviewed. It's called a pre-audit and background review. So they look at what you reported and gather all the information. Look at all of these. They talk about review in internal resources, which are the W-2s and things they receive. They talk about external resources. Maybe someone called and reported you, that's external. And they talk about comparative data. Look at that. And then they talk about other investigative sources. Maybe you got audited by DOL, and the DOL, you know, filed paper to IRS, goes, these people, they pay their employees all by contractors, or they make their employee working 80 hours a week and only pay 40 hours. So things like that, it can be elevated. Or your food stamp people, and your food stamp people notice that your food stamp spending is out of whack. Most of the grocery store has 25% of food stamp claim, and you got 95, so then you're going to be audited, right? Those are all the background information for you to get audited. And then they do initial interview with you. And why do they do initial interview? They want you to talk about yourself. They come to your store, they want to see how you're dressed, how your store display. And by looking at your square footage, looking at the shelf, and looking at you, they already know roughly how much money you would make. And they look at what car you drive. Those are called minimum income probe. Okay, so I look at you driving a Mercedes, and I'm looking at you, and I come to audit you, and you still look pretty well preserved, and it doesn't look like you work in the store at all. And I look at your hands, and I don't think you ever pick up your vegetables there. And then the store is nice and big, and then you tell me that you made $270,000 gross sales. No way. So people understand. So these are all the things, and they study, IRS study to audit a grocery store. So I want you to know these resources. If you get audited, you come over here to look at their IRS's audit techniques guideline, because this techniques guideline, it is for auditors, but it is public information. So you should come in to study that and know what you're dealing with, right? And if you say, well, Ying, I don't want to study that, are you kidding me? And that's why I have you there, sure. And if you come to us because of our experience, we don't study that every time. We already knew what to do. So we will quickly get into preparing for audit. And so let's go look at, while they're doing, you got all the IDRs, and they audit us. So what happens after that? After that, the auditor who was working with you, which you probably got really upset with him, feeling really, really stressed. And I totally understand. But, these auditors from IRS, you just have to remember that's their job. And if someone is giving job to write ticket up on the highway, that's their job. So what can you do? So don't, look at the auditors thinking they're not nice. They're probably very nice person. But their job is to make sure you're doing the right thing. So yes, they're gonna ask tough questions, and they're gonna come up with their proposals, okay? So in this case, in the case I was talking about, so they came up a proposal. So here is the proposal they came up. So it's called 4549. And the auditors will never come to visit you and look at your paper and they're pissed off and give you a number to pay taxes. No, they look at your paper, they do whatever they can to come up with a reasonable estimate. Could be to your disadvantage because you don't have any paper, but if they use your paper, come up with something, it could be very different from what we think it should be. But they will tell you what they want to charge you. This is the form, 4549, they give you an estimate. Look at this, cost of goods sold. Cost of goods sold, and they're saying that we have $29,000 difference from what you put on your taxes and what the auditor believe it is. So other deductions, what you have on your taxes and what auditor believe is, and all of these ones, and you can imagine, I know the negative positive is kind of confusing, but I want you to just remember all of these numbers, as long as it is positive, under 4549, as long as it is positive, it is increase in income. They are increasing your income. So if it is cost of goods sold with 29,000, that means you claimed more cost of goods sold, they're reducing it. They reduced 29,000, so that's additional income. So this gives additional income of 139,000. Okay, so that's what the auditor proposes. And once the auditor proposed that, then you would have, you would receive what we call step number 2, 30-day letter. Let me show you what that is. So now we got into step 2, 30-day letter. And you're gonna hear the auditor talking like that too, because that's how they refers to that. A 30-day letter, I have a sample to show you, but on the letter, there's only 3 things it tells you. They tell you that, do you agree with what I did to you? And if you agree, sign. You can make installment agreement. You can make an auto pay. You can make a payroll deduction to pay. You can make a credit card payment. Of course, there's a charge to it. So you agree, you pay. Or you can disagree. And if you are disagreeing, and you can arrange a conference call with the auditor supervisor. So the person who come around audit you, and that person has a supervisor, always. So that supervisor, you can have a conference call with that person and to say that, well, I don't really agree with this audit because I have a whole bunch of receipts come up and, he doesn't accept it. He says that is not my receipt. Well, you can say that. Then the auditor manager might say that, why is he saying it's not your receipt? And you may say that, well, I don't know. And this is my receipt. So you could meet with the manager. You could tell the manager that, oh, wow, yeah, this receipt is under a different name. And this is a true story. We have a grocery store client and under Schedule C. So he buys staff from a particular vendor, and that vendor always write his Vietnamese name. So the Vietnamese name was different from his real American name. So we call him John, but his Vietnamese was something different. But the receipt was under Vietnamese name, but the auditor only know his English name because he become a US citizen, and he goes by that real English name. So auditors, of course, disallowed all of these purchases because they're under a different name, but not known to the auditor that this is his real name before he become a US citizen. So in that case, you call the manager, you can explain the situation. The manager might just agree, then you pay less taxes, right? So that's, if you disagree, you can call the manager. And if the manager goes, well, I don't care, and I'm not changing anything, then you can go to appeals. And if it is less than $25,000 differences, the charges, like the tax owed amount, like the auditor gave you the tax owed amount, right? If it is less than 25,000, and you fill up a form called 12203. Very easy form. You write down what you don't agree and you submit to appeal. And if your tax due is huge, and we have cases where they owe $800,000. So if that is the case, you go to appeal, you need to write a protest letter. And that letter needs to go to the auditor. So I will show you those examples after I go through this whole 30-day letter thing. But of course, you also have an option to just ignore it. If you ignore it, you will receive a notice of deficiency. That is a notice coming in, says that this is the number you need to pay. So on the notice of deficiency, it gives you 90 more days. Because after your 30 days letter you ignored, 30 days already passed, right? And then in maybe 30 days or 35 days, 40 days, you will get notice of deficiency. But when you get that, you have 90 more days to decide whether you want to pay or you want to file your tax court petition. And I know that word is big. It's, man, I have to go to tax court. No, you file the petition. Petition has a certain format. I will show you that too. And you file the petition. The tax court will accept your case and assign a case number, but they will go to another division called technical service. It's like appeal. It is appeals. And so you will go through the appeal process, like what I will explain to you. Okay, so, but this is the 30 days letter that will let you go out of the auditor. Now you're dealing with a different sectors inside of IRS, and you will start dealing with appeals. Say if you disagree. But let me add one more thing right here. You don't have to agree with everything. You don't have to disagree with everything. So at this time with a 30 days letter, you can literally just say, I accept that, but I don't accept that. And then you can work with the manager and work with appeals the same way. So you don't have to disagree with everything. In a lot of cases, we actually agree with a lot of things, just 1 or 2 items, we go up to appeals. So that is the 30 days letter. And let me now share with you the screen for those letter, what they looks like, okay? Now, you see 4549, this is the one that the auditor already assessed. And I want to walk you through that. So we got additional income. So the taxes becoming $53,000 taxes we have to pay. And then it has a penalty, accuracy penalty. And in this case, there's a delinquency penalty. And then you ended up with $75,000. So a lot of dollars that the auditor wanting you to pay. And in this case, we got a 30 days letter. The 30 days letter, you see, this 30 days letter, the auditor actually writes it in because it writes the date you receive the letter and it give you a date that you must answer, agree, disagree, or ignore, okay? So in this letter, if you just read through the letter, that was the slide I show you on the 30 days letter. So now, if it is less than $25,000 taxes, which means this number is less than 25,000. If that is the case, you fill up this form, 12203. See, very simple. Taxpayer name, identification number, your address, and your tax period that you're being audited, your disagreed item. You could write in here, say, they disallowed my cost of goods sold, and I think they cannot disallow that because that was under my old name. So you will write the reason why you don't agree, okay? And then if it is over 25,000, and then you will write this protest letter. This letter goes to your auditor because the auditor will look at the letter and they're trying to figure out whether he will make any changes or he will let you go ahead to go to appeals, okay? So this is actually me. I wrote this letter. I just want to show you, see how I have things. I didn't show you the full letter because obviously it's client's confidential information. So right here, they charge accuracy related penalty. I disagree. See, I say my position, I disagree. Then I quote. Then I quote IRS regulation to prove that. And then here, sale of property. And see, I say I agree. So it is my letter to tell them what I agree, what I don't agree. So this letter, if the IRS auditor goes, oh yeah, then fine. I'm not gonna change my my assessment. Then I will go to appeals with this letter. Okay, so this would be a protest letter, and it's also the one letter. It's a letter I give to the auditor, and the auditor do not accept it. It goes to appeals. So that has to be done within 30 days after you receive that letter. Remember the letter we were looking at? This letter, 30 days letter. Then we would file protest. And then once we file the protest, and this is where I start working with appeals. So the appeals will call me, and normally they will assign a person to you. So you get that person's name, you know where they're located. And in Des Moines area, we work with Omaha appeals, and occasionally we go to Chicago, but mostly Omaha. And so in the appeal letter, the appeal officer will look at what you have. And keep this in mind. When you go to appeals, you do not add any more documentation. You can only clarify what you have given to the auditor, but by the rule, you should not go, oh, I discovered something new, let's give that to you. By the rule, and they don't have to accept it. But a lot of appeal officers would willing to do that, that's a favor. So you want to make sure that you get all the document you need to get to the auditor, and so that same document can go to appeals. But my experience is that if the case is really big, a lot of time the auditor got really kind of messy with the document because the back and forth, IDR 1, IDR 2, IDR 12. I mean, it will be a room full of document. And with that kind of case, it is really difficult to give appeal all of that. So appeal sometimes don't get what you give to the auditor. That's why you want to keep everything that you have. So when appeal time comes, you can show the appeal that this is what I did, IDR 1, IDR 2, IDR 3, 4, 5. So appeal has all your information. So once appeal finish examining you, and the appeal will give you a letter. And that letter will show you their final adjustment. So in this one, they will say, okay, instead of 139,000 additional income, it's only 13,000. So the appeal will adjust it and will work on what you have. Of course, if you don't have a good case, you don't go to appeal because you will fail there. But you know, the cases we handle, if we think that the case is very strong and the taxpayer has a reasonable base, and we don't give up. And just because, oh yeah, it's too much time already, we cannot always do this one file. No, we get through. And that is the spirit of Community CPA. We don't let laziness take over anything in our professional work. We work hard. That's really, that is unspoken truth because people can even see it. So this is the step 3, right? We went through IDR. We talk about our step number 2 is 30 days letter, right? And then we get into appeal. And you must be disagreeing or partially disagreeing before you go to appeal. If you agree, the 90 days letter is the last thing you do. You just agree and you pay. And you can get to appeals from auditor, or simply when you get notice of deficiency, you have 90 days to act. And a simple protest letter to appeal, sample of protest letter to appeal, which I showed you, and meeting with appeals, always meeting with appeals. It, you know, a lot of times before pandemic, and I literally go to Omaha to meet with appeals. I don't take shortcut because getting face-to-face meeting, bringing all my box of document, that is actually important. And do you know that I actually carry that luggage cart with box on top of box, and I take the box all the way to appeal office in Omaha or in Chicago. So that is important. So when you hire someone to work on your audit and you want to ask, so how do you meet with appeals if we need to appeal? If they tell you that, oh, we meet correspondingly and we talk on the phone and never really express the possibility to meet face-to-face, I would consider that maybe a harder working person would actually went to meet with appeals. So then the appeals decision is final. That's what I was showing you earlier. That form 870, that is your appeal final number. And so that would kind of finish what we were talking about, the whole audit process for a grocery store. And now you say, well, oops, it's all done. That's great. And appeal gave us a final number. It's a lot smaller than what the auditor want. I win. No, not yet. And after the audit, and you will end up with the state follow up with you, because most of the state, you have a federal income tax, you also have a state income tax, right? And the state income tax will automatically be there because federal government has the system connected with the state. If federal taxes increase, state taxes increase. So I'm giving an example. If you had a $20,000 income out of the audit and you have to pay taxes on, and your federal tax is $5,000, your state would be around $2,400 plus interest and a penalty. And if there's a labor practice issue, for example, the auditor went to your grocery store and there's a person moving boxes around, auditor say, oh, who is this? Oh, you say, well, oh, that's Jesus, and he just helped casually and he doesn't really work here. And the auditor will make a mental note, if it is not a real note, to look for this person's payroll on your tax return. If you didn't even have payroll and you're claiming having a labor, and even though you say it's casual labor, IRS don't know, and that could be a referral to Department of Labor to audit your practice in fairness of labor. So, you know, Department of Labor is known for coming to the business, making sure that the employees are being treated fairly by the labor law, right? And so that could be a referral, and it can also be referred to IRS investigation. And if IRS auditor believes that you are purposefully defrauding the system, and they don't have to tell you, they can submit you for investigation, then you're gonna meet someone with a badge, okay, for FBI for investigating. So now, so the aftermath is not all inclusive. I'm sure there's a lot of aftermath. If you were audited and owning so much money, IRS think that you're just there to destroy, to fraud the government. And I'm sure there's much more things could happen to you. But these are the things we have seen in the past. Now, how to avoid audit? I knew you're gonna ask me that question. And prepare your tax structure for grocery store. And I would never ever advise you to have your grocery store be a C schedule and under 1040. It doesn't matter how convenient that is to you. Maybe you care to save, money to file company tax returns, a waste of money. You don't want to do it. You want to file one tax return. And there is a saying goes that, the small business owner, we work our whole life to save this much money, but in one incident, we could lose all of the money we saved. So that is referring to the audit, right? So you want to make sure that you prepare your tax structure, and obviously we provide that advice to you. And if you have that question, and monthly accounting bookkeeping. So why I say monthly? Why I not say the end of the year? Because there's no accountant can do a thorough job for you if it is not done monthly. So in our practice of monthly accounting, and we finish the bank reconciliation, we resolve all of these charges you have on your account, and that has no name, no reason. We don't know how you were charging that, and we'll figure out, what you're doing with that money. You maybe draw a $2,000. So on the bank statement shows customer draw, $2,000. Do you want your accountant to put that under expense, or you want your accountant to put that under your capital draw or your owner draw, or that even your payroll, right? So we need to solve every transactions for you on the monthly basis. I wish we can do it daily basis, but no, we have over 9,000 clients, so we do monthly. So monthly accounting bookkeeping is so important. And look at what auditor asked. That is very extensive, so you want to be prepared. Professional assistant at all time. You want to look for a CPA firm that is not somebody that you can't even, not someone that you can't even reach when you need it. And you want to work with a person that you can see face to face. There are people who would look for tax help for a 1-800 number. 1-800 beat IRS, whatever they're doing. Their advertising is so magically, it's almost like, IRS is working for them, and not true. And you pay your $3,000 down payment, what happened? And you're gonna get nothing done. You still have to come back to meet a person you can trust. You can see their face, see their expression. And the reality is that most of the humans, and we can roughly manage to know that person by looking at that person's face. Am I right? And you look at me, you know that I am a hardworking person and I don't do fluffy stuff, and you want me to work and I work. So that's kind of what you see from me. And the same thing, when you work with the tax professionals and you want to make sure that they're really, really doing that for you, not just doing a sales pitch. So professional assistants, whenever you have questions, some employee come to you and wanting to be your employee, and it tells you that, well, I don't really have, I'm waiting for my green card. So right now I don't really have anything. Can I just work for you? And later on I'll give you that documentation. Questions like that we can answer. Okay, so those are the things I say all the time. And compare data to last year's tax filing data. Always compare your data from one year to another, and to make sure that it's consistent. Make sure that it makes sense. Make sure that you are not creating ambiguities from one year to another and making it very easy for IRS to spot. So comparing data match with Community CPA. We do data match in our firm, which means that we match your data with what IRS data is. So if your data, if you give me an income for 2 million and the IRS shows that you at least had 2.4 million, you think I'm going to file your tax return? No way. I will tell you that there is no way I will file your tax return as 2 million because you're on suicide mission. So you need to make your sales more than 2.4 million. And you also need to make it more than the merchant account, because you can't tell me that as a grocery store, you only have credit card income, right? So those are the things. And imagine if you are even doing cash checking, and also money wiring kind of business in your grocery store, that's a whole set of AML audit, AML compliance you need to do. Money laundering is against the money laundering law, I think, AML, and that you need to work on. So those are all things you just need professional people to come to your business to get you all lined up properly. As a grocery store, be aware of Form 8300. And are you not knowing what is 8300? Let's take a look at that. So I want to show you a 8300 form. Here you go. 8300, report of cash payments over 10,000 received in a trade or business. So if you're a grocery store, and this is a real story, a grocery store, and when they purchase meat, the meat locker always asks for cash. So they got used to submitting cash over, get the meat. So this grocery store literally go to the bank, cash out the money, and go to the meat locker to pay cash. And the meat locker and had submitted $83 form because they are receiving cash payment from you for over 10,000. So the IRS come around wondering, why are you paying why are you paying so much cash on the purchase? And because IRS has these forms filed every time you do that. And you'll say that, well, what if I just buy 9,000? Next day I buy another 9,000. Am I going to get this form triggered? Yes, because that is in the reasonable period. It's so subjective, depends on the person who files it. And you also have a responsibility to do that too. If someone wants to wire money for 10,000, you need to fill up the 8300 form because they give you $10,000 cash, right? So all of that could be a reason and why you get audited. So to avoid the audit, you just want to know that the more chances you file 8300 or be filed a 8300 form, the more chance you get audited. And choose the right software, working with bookkeeping, working on bookkeeping. That's another advice I give you. I told you how QuickBooks works. I showed you what IRS is asking for. And there's other software you can use. And why not work with Community CPA to use the software we use that is done by Thomson Reuters. And that is a huge company. And I don't see the reason for IRS to tap into that company to get licensed just because that's an accounting CPA firm specific software, and the clients who are using that software most likely is already working with a CPA firm. But if you are not working with a CPA firm, most likely you will never have access to that kind of software. So consider that is a possibility for you to get into a new software if you happen wanting to change your software someday. And now, the last but not the least, I want to ask you I want to say that what if you have already been audited, right? And so then you need to know which stage you are in. So maybe you are at IDR stage, which is the data gathering stage. That is a very important stage because we want to make sure all the data are in. So if we don't work out with the auditor, we can go to appeals with the same data. So that is the IDR stage. 30 days later, let's say you already got the 30 days later. And in this case, most likely, if you come to us at that stage, we actually will go back to the auditor to see whether we can take our time to study what you submitted and to come up with additional information to let the auditor reissue that 30-day letter. But if the auditor goes, oh no, I already spent a decade on it, I am closing. And then of course, we have 30 days to file appeal. We have 30 days to talk to the manager. And after, or even if you already missed the 30 days, you went to 90-day letter stage, that's okay. And we can still file with appeals within the 90 days with the tax court. Or we can simply do amendment because it's already final. We want to do amendment, reverse that, and going back to audit stage all over again. And of course, if you missed all of these letters and you already in the collection stage and you getting calls from IRS hires third party to collect on them. So collect on you. So you got third party calls and your letter is piling up at your home and you're literally sitting on it. You don't even want to open anymore. And if you are in that stage, and most likely if we come in that stage, we will, number one, schedule an installment payment plan for you so you don't end up losing all your license and everything in your work because of IRS notice, IRS money you owe. And you can't even sell your house anymore because IRS already put lien on it. So what we do is we put installment plan together, and maybe you are so not doing well and the installment is 0. That's very possible. And then we go back to amend your tax return. If the assessment is so reasonable, the collection is deemed to be appropriate, then we just do installment and get you going with life normal, right? But again, doing installment plan doesn't stop IRS putting lien on your house. They still do. So if you have a house and you also have collection, then too bad, very sad. You're not gonna be able to sell your home until you finish paying IRS. Or when you sell the house, the money will go to pay IRS.